Okay guys, welcome back to the channel, and today I wanted to do an ROI on our income portfolio that we're living off of. Now for those of you who don't know, this is our portfolio, and this is a sheet that my wife made to track our dividends so we could know exactly where we are on return on investment. We want to know how much of our money that we put out did we get back already. Now she has broken this down here on mine, and she has it on hers. So she puts in every dividend, and then here on the cover page, she set it up so we have a ticker, shares, investments, the cost, the current share price, current value, my dividends, her dividends, us together, the percentage of return, which is what we really want to look at. The ticker's on this side to make it easier. And then over here, she has dividends and current value, which kind of allows you to look at the whole situation in one go. But what we're really worried about is percentage of return. Now, later in the video, I will explain about some of them that are holding up share price better than others because it's really easy to see on this sheet. But I also have to tell you that we sell options against this portfolio for a second income. So we margin against this, use 50% of our margin to sell options on other stocks to create another income against this portfolio. Now, some of these are depreciating assets. You realize that, you know that, and then some of these have appreciation. The point is to balance it out so we stay around $175,000 for our total value. Now, let's go through these real quick. So the first one's by Yield Max, and that is NVIDIA, and we are at 64.37%. Now, the next one is Coney, but there's a few of these, and I'll tell you the ones as we go, that we already had ROI. So we've already had all of our money we put out back, and then we ended up getting assigned more because we were selling options on them. Now, there's only a few of these. Coney is one, though. We already made it to 100% of our money back, and then we got assigned some shares, and we just kept them to let them keep paying us. So now we get reset on the clock when that happens. So we're at 73.21% on Coney. Next one is FEPI, and I've been extremely impressed with how it's held up, honestly, and a 29% return on investment, which is great considering it only pays like 24%. Now, next is QQQI. This one holds up great. We have a 10.48% return on investment. It will be around for the longest of time. It will always be a part of our portfolio. We are actually waiting for the new funds to come out from NEOS as soon as the government decides to open back up, because we're going to be picking those up too to expand our portfolio with more NEOS funds. Next, we've got YMAG. Now, everybody talks about YMAX, and I've been saying forever that YMAG is actually the better holding. And I think that this shows by 51% return on investment since we bought it. Now I'll show you later the share price has actually been doing pretty well for YieldMax. We all know YieldMax is a depreciating asset, so this is kind of a nice way to be able to actually look at it in real world. Next is Misty. This is another one that I got stuck in some puts and got assigned, and we just decided to keep the shares. We already had been at return on investment, but with those new shares, it kind of resets it. So you have to go back in and do the numbers, and it comes out to 85% return on investment. We've got 85% of what we put into it back. Now, the numbers are not pretty share price wise, and we'll go over those later, but we have that much of our money back already. That consisting of some serious numbers. Next is XDTE. Now, XDTE is one that I am not the biggest fan of. I think their strategy works well at times, and other times it doesn't. But it's already paid back 20%. And when I show you the share price and explain it later, I think you'll see that it turned out to be a good investment for us. The next one is TSMY. And I'll be honest, we only got this because we needed something on Group A. And that was a place filler, and I've been pleasantly surprised with how it's been performing with a 42.62% rate of return, return on investment. That has been very nice, and I gotta say I'm pretty impressed with it. Next is AIPI, a 19.55% return. We haven't owned it as long as its brother fund or sister fund, whatever you want to call it, FEPI up there. but it has been paying out and the share price has been holding up okay. It's still, we're going to have to wait in the future and see how it plays out. Next is YBTC. 11.76 return. I don't have a lot of these, and I don't think I'll be buying any more right now. I don't think it's doing bad, but as you can see over to the right, there's a negative 176 on the current value, so I'm upside down in this position. You know, it's one of those things where you just have to let it ride on this one. Next one is TSLP. That's my wife's position. I'm not big on Tesla. She wanted to have that in there, and it actually has been doing all right with a 13.17% rate of return on investment. It's doing all right. I got no complaints. We don't have a lot of it, so we don't have to worry about it. But the next one is NFLP, which is based on Netflix. We all know how much Netflix dropped recently. As you can see over to the right, the negative $29. It has a 4.57% return on investment, but I think you can attribute that to its giant drop. So next is going to be AMZP at 13.59%. Now, once again, another one's had a pretty good drop since we purchased it. As you can see on the right, negative 2.92. But with a 13.59% return on investment, you really can't complain for as little of a time as we've owned it. Next is Goop. I actually really like this fund. It's 11.59% return on investment, and it actually has been doing pretty decent for us. Once again, not a giant holding, but it does what it's supposed to do. Next is BTCI, one of the channel's favorite, one of my favorite, with a 13.03% rate of return on investment. This allows us to hold up better. Even though it's had a drop lately, the money's been flowing in. It's consistent. It comes out monthly. I'm pretty happy with it. So next is going to be surprising because we haven't held it very long, and I actually am selling more puts on it right now, and that is Plady. So they very well could be resetting this return on investment. But right now, we're already at 46.47%. That means we've almost got half our money back out of this position. Much like the next one down, which is Hooy, H-O-O-Y, by YieldMax, with a 31.78% return. Now, that is quite good because I have not owned that very well. But you know what I've owned less? HOOW, and I'm already at 26.33% return on investment, which is crazy because I have not owned that long at all. Next down, PLTW is my wife's position, and it's at almost 21% already, which is nuts. COIW, that's at 20% already. I mean, these funds are just killing it, and they haven't even been out that long. Now, the next one is Maggie, and I keep telling everybody the Mag 7 is what's going on. They lead the entire index. I really think that people try to diversify and hurt themselves because these funds will put all kinds of different ones in there. If you stick to the ones that are kind of proven and kind of boring, like Maggie or YMAG, you'll probably do better. Now, I haven't owned Maggie very long, but with a 5% return already, you can't complain. Now, the next one is WPay, and I literally just got this, and I'm already 0.31%. Now, there was a drop in the share price, which is why it isn't higher, but I think it'll recover just fine. Next is NVDW, another new fund by Roundhill. I haven't had that very long either, 13.79% already back on that one. Now, the last two are just placeholders. I've got one share of each, Biddy and Baggy. I'm waiting to see if Bitcoin cycles again. Right now, I'm kind of underwater in these, but with a 1.96 and a 2.78 return on investment, I'm going to get my money back. It's just one share. I just have to be patient. I'm not stressing these positions. I'm just going to let them sit there and kind of watch what they do. But if we go over to the other side here, I want to show you a couple of these funds. So first off would be FEPI. Now, if you look here, our investment was $14,970. That's what we put into it. Its current market value is $14,576. So you've had some slippage, but it has recovered a lot. But on top of that, we lost a couple $100, but we gained $4,372 in dividends. Now, if you look at QQQI, all right, we have 228 shares, $10,270 is what we paid for the shares. it is now worth $12,512. So you're talking like over $2,000 in appreciation. And then you go over and realize you got paid $1,076 in dividends. So I think that should show you the value of QQQI. Now, another one I want to talk about, and this was not like awesome. I just saw the drop in the market and I had some cash on the sidelines, so I bought XDTE. Now I paid $19,932 for it, and it is now worth $21,056. So that just shows that it's not market timing. Just if you see a big dip and you believe in that moment that that fund's underpriced, buying it may be valuable if you can be patient. But we have also gained $4,000 in dividends from this. So I'm not saying XDTE is a great fund, but I think that at times it makes sense if the market drops it lower than it really should be. Another one I wanted to point out is AIPI. So we have 149 shares. We paid $6,446 for it. And it is now worth $6,641. So, you're talking about $200 appreciation, but we got $1,260 in dividends. So I think a lot of these, you can hold your NAV up somewhat. Your net asset value can be held up somewhat while still collecting these dividends. So all these I showed you them because these are what we're buying if our portfolio ever drops below 175,000. When we want to put it back up, these are the funds we're buying, and that is why our overall portfolio value is holding up so well now, even though we have all these depreciating assets in here, because these are depreciation assets. Now, I told you earlier about YMAG. $20,997 is what we paid for it. $16,396 is what it's worth now. So that's a $4,000 drop, But if you go over, we've made $10,719 compared to most, yield max funds. That's pretty good, guys. Now, I want to show you the bad too. All right. So if you look at Misty here, MSTY, we've got 1,578 shares. $42,680 we had in this, guys. And it dropped to $18,521. That's bad. But when you come over, we've made $36,000 in dividends. All right. So you really have to look at this. I do think MSTY will have a small recovery. I don't think it will ever go back to the moon again. But really, with it being at 80-some%, in the next few months, I will probably get back to 100% return on investment. And then everything after that, I just let it keep paying. It really is irrelevant whether it keeps going down or not. It'll reverse split, whatever. I just collect the cash. I'm not saying you should do this because our portfolio is buffered by selling the options against it. So not only are we getting all this dividend income, but we're also getting our option premium every single week. So that gives us the ability that if the net asset value drops under $175,000, we just invest back in some of the profits to push it back up, but we're adding all these safer ones that have a stronger share price. The yield may be lower, but that's pretty much irrelevant at this point because we make more than enough every month to be able to live and be comfortable and be retired. Now, we do other things, like I do YouTube, a little bit of firewood. My wife likes to go out and do, a little DoorDash, a little Walmart Spark to pick up some extra cash. But it's not necessary. We just do that because we like to be busy in our lives. This portfolio pays our bills and has since January 1st. I really believe that you can do a version of this that doesn't have all this depreciating asset, but you need to have a bigger portfolio. That's the trick. This was just the fastest way to get it done. I won't say that this is the best way to get it done. But I think my wife did a great job of building this spreadsheet. It really is something that I can bring to you guys and show you real world percentage of return. Now, percentage of return should never be your end all be all. I think this also does a good job of showing you invested cash versus current value, so you can get an idea of what we probably shouldn't have invested in and what we should, and how some of these go down the hill and some of these hold flat and some of these go up the hill just slightly. And the mixing of all of them to create a portfolio that can hold itself up is the actual goal. So with that said, if you haven't already, and I don't know why you wouldn't have, go down, hit subscribe, hit the notification bell so you can be alerted to all of our upcoming videos. Leave us a like if possible. Let us know down in the comments, do you hold any of these? How are you doing on return of investment? Have you gotten all your money back already? Because some people have. Let us know which ones of these you like, you dislike, and we'll see you in the next one.